Welcome to the exciting world of the stock market. If you're new to investing, navigating the complexities of the stock market can seem daunting at first. But fear not, this beginner's guide is designed to provide you with a solid foundation and help you understand the basics of investing in the stock market. Let's get started. 1. What is the stock market? The stock market is a platform where buyers and sellers trade shares of publicly listed companies. When you buy a stock, you're essentially purchasing a small ownership stake in that company. The stock market allows investors to buy and sell these shares, with the aim of generating profits over time. 2. Why invest in stocks? Investing in stocks can be a great way to grow your wealth over the long term. Historically, stocks have provided higher returns compared to other investment options, such as bonds or savings accounts. By investing in well-established companies, you can participate in their growth and benefit from capital appreciation and dividends. 3. Understanding stock market indexes. Stock market indexes, such as the S&P 500 or Dow Jones Industrial Average, represent a basket of stocks that reflect the overall performance of a specific segment of the market. These indexes help investors gauge the market's health and track trends. They provide a benchmark to measure the performance of their investments. 4. Types of stocks. There are two main types of stocks: common stocks and preferred stocks. Common stocks give investors voting rights and the opportunity to receive dividends. Preferred stocks, on the other hand, offer fixed dividends but usually do not provide voting rights. It's important to understand the differences between these stock types before investing. 5. How to buy stocks. To buy stocks, you'll need to open a brokerage account. Research different brokerage firms to find one that suits your needs. Once you have an account, you can place orders to buy or sell stocks. It's important to research the companies you're interested in, analyze their financials, and consider their long-term prospects before making investment decisions. 6. Diversification. Diversification is a risk management strategy that involves spreading your investments across different asset classes, industries, and companies. By diversifying your portfolio, you reduce the impact of any single investment's performance on your overall wealth. This helps to minimize risk and maximize potential returns. 7. Long-term investing. The stock market is known for its volatility, with prices constantly fluctuating. As a beginner, it's essential to adopt a long-term investing mindset. Trying to time the market or make quick profits can be risky. Instead, focus on investing in solid companies with strong fundamentals and holding on to your investments for the long run. 8. Basic investment strategies. Two common investment strategies are value investing and growth investing. Value investing involves identifying undervalued stocks with the potential for long-term growth. Growth investing focuses on companies that are experiencing rapid expansion. Research these strategies and consider which aligns better with your investment goals and risk tolerance. 9. Learning from mistakes. Investing is a learning process, and everyone makes mistakes along the way. Don't be discouraged by setbacks. Learn from your investment decisions and adjust your strategies accordingly. Continue educating yourself about the stock market, stay informed about market trends, and seek advice from experienced investors or financial advisors. Conclusion. Congratulations on taking the first step toward understanding the stock market. Remember, investing in stocks requires patience, discipline, and continuous learning. By following the basics outlined in this guide, you'll be well equipped to embark on your investing journey. Best of luck in your stock market endeavors.